What's up guys, my name is Matt Beans and I want to go over why you form an LLC and how to absolutely lose everything in your business and then how not to lose everything in your business. So the reason why you will lose everything in your business is because when you structure and create your business, you're going to open what's called an LLC. That LLC stands for Limited Liability Company. Now, the purpose of having limited liability for your company is so that way if your company ever gets sued, you go bankrupt, customer sues you, vendor sues you, whatever the case is, the liability is limited to your company. Now, when you form that LLC, you go and you open a bank account and that bank account is directly linked to the LLC, right? And then you as an individual started the LLC and you are the president, the owner, the sole manager, the member, whatever title you give yourself. And then on this side, you have personal, right? So you've got personal and business. On your personal side, you've got personal bank account, credit card, basically all of the same structure you have outside of the LLC. You just have an LLC over here that makes a legal business entity. Right in between this, when you form the LLC docs and create your articles of organization, you create a veil. And that veil separates personal from business. Now, when your business, if it ever gets sued, goes bankrupt, whatever the case is, the assets are the only thing that person can come after. The second you start commingling funds, so that means you pay personal expenses from your business account or business expenses from your personal account, that's called commingling. The second that happens, now you have pierced the veil and you can lose everything. So now I want to get into, this is why structured banking system, your financial structure and financial management within your business is so critically important, because messing this up even one time can result in losing the limited liability of the company, even though it's still a legal LLC. Whatever ends up happening over here as far as asset protection, they can now come for your personal house, your personal cars, your personal bank accounts, your personal everything. In order to not have that happen, right? Sometimes the way to figure out what to do is figure out what not to do first. So what not to do is don't commingle funds and just have credit cards and bank cards and all this, and you're just swiping personal on business and business on personal and business on business and personal on personal, and there's no structure, right? That is what you don't want to do. So what do we want to do? What we do want to do is run it like an actual business. And what does that mean? That means we have a very structured way that we run our businesses. And a lot of times you'll hear, oh, when you form your LLC, go open a business bank account. That is true, but once you start making money, you need an actual business structure. And here's the banking structure that we like to see. We need at minimum 5 accounts. It's going to be income, operating expenses, taxes, owner's comp, and profit. So all your money is going to come into the income account, and then you're going to have a distribution day, whether that's every Friday, every other Friday, the 10th and 25th, the 1st and the 15th, the 15th and the 30th, whatever days you pick for your allocations day. And then you're going to allocate money from your income account and distribute it to the other 4 accounts. Your OPEX account, which is operating expenses. That's where you run your marketing, your payroll, your rent, all those. Your owner's comp account, which is what pays you. And then you're going to have your profit account, which is what pays the investors of the business, which 9 times out of 10 is also the person running the business. But should you ever sell, that's where that gets important. That's another video coming. And then your tax account, and that's to set money aside to pay Uncle Sam at the end of the year. So now we've created a structure where there is no reason at all why you should be paying your personal accounts into your business accounts. And if you do move personal money into your business, it should go directly to your income bank account as an investment into the business. From there, now that money gets funneled into operating expenses, paying the person running the business, right? Now it gets distributed, and then you do your allocations correctly based on how you would do allocations as an investor rather than income allocations from a sale. So don't lose everything. Like, there's very real thing. Like, if you do get sued in business, which anybody that is successful in business will get sued, you want to keep that limited liability on the company and not open yourself up to the risk of losing your personal assets, your home, your car, your personal bank accounts. So Matt Beans, like and subscribe. It helps feed more people and help more business owners learn tips and tricks on how to structure their bank accounts correctly, how to limit their liability, increase the value of their business, and all of these wonderful things that we go into business to do, but we don't have a roadmap to get there, and I will help give you that roadmap and lead you along the way to do these things. So like and subscribe. Thanks for watching.